Welcome to CATEX TV. My name is Frank Fortunato. This is a live broadcast from Princeton, New Jersey. Today is Friday, December 12, 2008. It's 11:30 a.m. Eastern Standard Time in the U.S. It's 4:30 p.m. in London, 12:30 p.m. in Bermuda, 9:30 a.m. in Mexico City. If you need to reach us during the broadcast, you can phone in toll-free at 1-866-667-CATEX. Overseas, our AOL Instant Mail address is CATEX TV. We have one breaking story, and if you're in the northeastern U.S., you know this already, but a drenching storm went through the northeast last night, dropping as much as 4.5 inches of rain in some places, followed by a very swift-moving cold front that immediately iced up many of the areas in the northern part of this region. More than 1 million people remain without electrical power right now. 350,000 customers in the state of Massachusetts, 235,000 in New York State, and more than 110,000 in Maine, as well as others in Vermont and in Pennsylvania. There were a number of accidents and extensive delays at New York area airports last night as well. Now to our May news. Some more economic numbers came out this morning. Prices paid to U.S. producers fell more than forecast in the month of November on a record reduction in gasoline costs, of course. This is a sign that the recession is cutting demand for fuel and keeping inflation contained. The 2.2% drop in the producer price index followed a 2.2% drop in the month of October. Inflation concerns are now diminishing as worries about a prolonged U.S. recession intensify. With prices falling for everything from gasoline to automobiles, economists are predicting that the Federal Reserve will cut interest rates again next week to revive economic growth. One analyst said the immediate problem now is not inflation, but it's recession. We're seeing commodity prices continue to collapse. A separate government report that came out this morning also showed that retail sales dropped for a 5th straight month in November, with falling purchases at auto dealers overshadowing gains at department stores. Retail sales fell 1.8% in November. Last night, the Senate abandoned efforts to fashion a government rescue plan for the American automobile industry. The Senate Republicans, mainly led by this man, Senator Mitch McConnell, the minority leader, refused to support a bill endorsed by the White House and congressional Democrats. The failure to reach agreement on Capitol Hill raised a specter of financial collapse for both GM and Chrysler, which say they may not be able to last a month. McConnell and the other Republicans balked at supporting a $14 billion auto rescue plan approved by the Congress, by the House of Representatives on Wednesday. Negotiators worked late into last night, but deadlocked over McConnell's demands for steep cuts in pay and benefits by the United Auto Workers. However, just now, there's news coming out that, of all people, President Bush may respond positively to this problem. Bush is talking now publicly about making available some $15 billion in funds from the TARP, which was that $700 billion package released earlier this year to provide for financial institution help. Bush is making a speech at Texas A&M University in about an hour from now. It's possible he may make an announcement of some sorts then. People have their fingers crossed. Harry Reid, the Democratic Majority Leader, said that once it was clear a deal could not be reached last night, he said, "I dread looking at Wall Street tomorrow. It's not going to be a pleasant sight." Majority Leader Reid is probably relieved. The stock market's only down about 93 points now. Swiss Re has closed its credit and equity trading desks. This is in the latest series of moves aimed at retrenching its business to focus on its core products. This is being reported by the Insurance Insider. Ex-Credit Suisse executive David Bloomer, who has been reassessing the strategy of Swiss Re's financial market arm since taking over the reins earlier this year, confirmed the closure in an internal announcement yesterday. The credit and equity trading desks affected trades on behalf of Swiss Re portfolio managers for the $180 billion of funds managed by the firm. The desks were closed in a conservative move to withdraw from all types of trading in the current financial environment. Revealed yesterday in Trading Risk magazine, which is a sister publication of Insurance Insider, Mr. Bloomer also announced the formal closure of the life insurance-linked securities unit. This is a market that in fact has been effectively closed and suffering severe contagion from the recent financial markets turmoil related mainly to the withdrawal of monoline insurance companies from the space. Life securitization volume has fallen off a cliff in 2008, with only $255 million transferred to the capital markets. Last year, $8 billion was transferred. That's a heck of a cliff. Zurich Financial Services will pay a $25 million penalty to settle civil securities fraud charges from the U.S. SEC related to, guess what, certain finite reinsurance deals. The SEC said that Zurich's former reinsurance group, which was later spun off as Convarium and now operates as part of SCORE, designed 3 reinsurance deals to make it appear that risk had in fact been transferred to third-party entities, although the risk remained with Zurich-controlled entities. Since the risk under the reinsurance contract remained with Zurich, the deal should not have been counted for as reinsurance. Zurich Re improperly used reinsurance accounting for the deals, according to the SEC, which allowed the company to artificially inflate their performance figures and book a, quote, significant windfall, these are the SEC's words, when it spun off the unit in a 2001 initial public offering. Zurich said in a statement that it decided it was in the best interest of the company to resolve the matter with the SEC to eliminate the burden, expense, and uncertainty of potential law enforcement proceedings by the Commission. In addition, the SEC alleged that Convarium's IPO prospectus understated the reported loss due to the improper accounting, and that Convarium continued to pursue fraudulent deals once it became independent. According to the SEC, this was a scheme by former executives of Zurich Re and later Convarium to manipulate their performance results through sham transactions and improper accounting. It had the effect of artificially boosting Convarium's market standing and IPO offering price, causing significant harm to the investing public. Under the deal, Zurich does not admit or deny the SEC's findings, and it entered into a cease and desist order. No word yet on who those individuals are referred to by the SEC. Here's some news. The California Earthquake Authority Governing Board yesterday approved a team of reinsurance brokers to work on the CEA's behalf to meet the reinsurance needs of the Americans of the U.S.'s largest residential earthquake insurance provider. Aon Benfield will act as the lead intermediary. Guy Carpenter and Willis Re will act as associate intermediaries. CEA CEO Glenn Pomeroy announced that all 3 would participate in the reinsurance program. The CEA currently purchases more than $3 billion in catastrophe reinsurance. I think the normal commission on that is 10%, so that's a $300 million payday. We always talk about the tax loopholes that might be closing or being imperiled regarding Bermuda. Here's a meat and potatoes indication of actually what one is. The U.S. Senate Finance Committee Chairman Max Baucus, who's a Democrat from Montana, is seeking comments on a draft bill that could increase taxes on certain reinsurance transactions. According to a description of the proposal released by the Senate Finance Committee on Wednesday, the proposed change would affect only related party reinsurance where an offshore parent company reinsures a policy written by its U.S. subsidiary. The committee says the statement says that the proposal is designed to address the concerns that current law does not adequately level the playing field between domestic and foreign party related insurance. The committee notes that the draft contains similarities to a bill introduced in the House of Representatives in September. That bill, H.R. 6969 by Congressman Richard Neal of Massachusetts, quote, would amend the Internal Revenue Code to disallow the deduction for excess non-taxed reinsurance premiums with respect to U.S. risks paid to affiliates. The insurance industry is divided on this issue. As you can imagine, the Coalition for Domestic Insurance Industry, which is a group of 14 American-based insurers, supports the tax change. However, the Bermuda-based and offshore underwriters oppose it. The Risk and Insurance Management Society also opposes the tax change, holding that legislation such as this bill would have negative implications for the international reinsurance marketplace. More fallout relating to XL Re. Now we see that Credit Suisse cut its share price target on the Bermuda-based company down to $4.